offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Good evening. Welcome to Oregon Cash Flow Pro. My name is James Barber. I'm here to help you maximize your cash flow. How are you folks doing this evening? Hey, good evening, C. Dan, welcome to the cash flow community. Thanks for joining. Thanks for joining the channel. You too can become a cash flow community member if you just sign up as a YouTube member on the channel or become a patron. Either one of those helps out the channel and gives you access to our Discord server, where we have a nice active group of folks who talk stocks and all kinds of other things financial. So just a good group of people looking to help each other do better. Jones, how are you doing this evening? So this is our Wealth Care Wednesday live stream, where I'm here to help answer any questions that you might have financially, whether it's life insurance, infinite banking, dynamic banking, loans, credit cards, credit card rewards, your credit score. If you've got questions, I'm going to do my best to help answer those, providing you with some value. That's what we're here for. Every Wednesday, we got to take some time out of our week, and let's focus on making sure that our base, the base of our financial pyramid, is secure. It's what allows us to do all kinds of stuff. It allows us to engage in the investing that we need to do in order to reach our financial goals. It helps to ensure that we're insured enough. It helps to ensure that we've got our bases covered when it comes to retirement. So a lot of good things, a lot of good reasons to assess our wealth every so often. And I'm here to do it every Wednesday for you guys. Here to help out. Jones, you're interested in dynamic banking with your new mortgage. If you set up a meeting with you, what can I expect concerning this? Do you have a HELOC already? Or did you just set up, did you just get a refinance, or you just financed a first mortgage? Dynamic banking, I love dynamic banking. It is a great way for everybody to help maximize your cash flow. One of the best tools for doing dynamic banking is a home equity line of credit. Now, any line of credit is good. When it comes to our personal wealth and all of the cash flow that flows through our hands on the personal side as opposed to the business side, a home equity line of credit is one of the best choices for that. On the business side, a business line of credit is one of the best tools that we can be using so that we maximize the use of every dollar that flows through our business, not just the dollars that we typically send to our personal side that we take advantage of as member distributions or paycheck. So I would say if you want to figure out how to utilize dynamic banking, make sure you're watching the videos so that you understand what it is. You can get a HELOC with the same bank. Great. So it's always nice to have a HELOC with the same bank that you do your checking account with. If your checking account is not at that bank where you're expecting to get the HELOC, I would suggest consider opening a checking account at the bank where you're going to have your HELOC. It's going to be a lot easier for you to transfer money instantly. Anytime money comes into your hands, you want to transfer that into the line of credit, offsetting any interest charges that you might otherwise be developing. So that would be my suggestion. In fact, you may not need to set up a meeting with me to go over this, but you're certainly welcome to. If there's anything I can do to help point you in the right direction, if you're not quite sure, feel free to sign up, set up a meeting. But for the most part, what you're going to be looking for is, can I provide an example spreadsheet? I believe I have an example spreadsheet in my videos. There is, there's a car alarm going off out there. It's been a while since I've used a spreadsheet. Basically, I've kind of moved away from, early on when I did my dynamic banking videos, I did a lot of spreadsheets where I put in all the numbers and went through exactly how we're going to pay down the debt and when we can expect to pay it off and when to chunk it. And I've kind of moved away from that to getting the fundamentals down. As long as we have the fundamentals down and we're just moving our money efficiently, once we get in that habit, you don't really need to have a spreadsheet. You don't really need to deal with a spreadsheet unless that's your thing. I mean, if you prefer to have a spreadsheet to detail everything out, then that's great. There is a spreadsheet that I used, and let me think of that number, or let me think of the spreadsheet. It's like V72 or something. Let me look it up. Vertex 42, that's it. Vertex. So go to vertex42.com, and they have all kinds of spreadsheets that you can plug numbers into. But what I like to use is their debt reduction calculator. And you can plug in all of your debts into it. You can put in your income. And that's a great one for figuring out when to do your chunking or where to do your chunking, what order to pay it off in. You can go through and do the snowball method. You can do the avalanche method. You can tell it exactly what order you want to pay things off in. And it works out really good. So you can even plug mortgages in there. So that one's a good one for getting you going on dynamic banking. Feel free to check that out. Let me know if you got any questions. Okay. Krish. All right. CTRM. I hear ya. I hear ya. Let's take a look at CTRM. I'm not sure what you want. Castor Maritime. We'll look at the chart. I still don't know much about it because I'm busy morning till night with meetings, helping people out. Let me switch over, and we're going to look at this chart. Okay, so right here, right in the middle, right above me, this is the CTRM chart, Castor Maritime. This is the 1 minute. We're going to zoom out. Let's go out to the weekly chart, first of all. I don't know when this company came about. Looks like it's been around for a little while. So these are weekly candles that we're looking at. So it looks like it's been up to where? 590, 596, 725. And currently we're sitting at 94 cents. So ended the market today at 94 cents. So it's basically worked its way down. And it's done so with not a whole lot of volume. So on the weekly chart, you can see the volume, 1.5 million, 1.6, 1 million, a few 100,000 shares traded hands. Getting to 2020, 90 million, 40 million, 28 million. So volume started to pick up mid 2020s. And we can see down at the bottom here, now we're getting a lot more volume coming in. 800,000, a billion, 2 billion in the week, 2 billion shares in the week, 625 million. So a lot of heavy volume, but the price was very cheap. So this looks like, where was our price at here? It went down to 17 cents. So this is penny stock territory for sure. Low penny stock. Looks like somebody pumped it up. It ended up getting a lot of airtime since the beginning of the year. Even until now, but it looks like the volume is starting to drop as the price goes up. So this is a little bit concerning. What's concerning to me when I just look at those things? I don't know anything about the business. Okay, something else could have happened. There might be some reason for that to go up. But at the beginning of this year, end of 2020, there was a lot of penny stocks that got pumped and dumped. A lot of them. And it happened right around the same time. So I don't know if CTRM got caught up in that, where there was just people that decided to pump this thing, get it up, and this one happened to stay up, or if there's some other fundamental reason why it's starting to get some traction when it's basically been fading for the last 2 years. But I would watch out for that. This does look like it could be a pump and dump, although it's pretty sustained. A lot of those pump and dump ones did go up a bit over time. I mean, it took a little while to rise up, but it is starting to go down now as the volume fades. Or I should just say the volume is fading. The price is not fading. I know that I do recall reading a story, Castor Maritime. They've got a deal coming out, or they just made a deal with somebody, or they're buying new ships. Something like that. I remember seeing a story like that. Somebody was pitching that when I looked it up. So that could be the reason why it's still maintaining. It also could just be a lot of people are in on this now. And so it's going to stay up until people realize why it was a penny stock before and it goes back down to be a penny stock. So, I don't know. No, you're not necessarily screwed. I mean, when did you buy in on this thing? Sometimes penny stocks recover. Sometimes they recover. I'm just looking at this chart. Like I said, I don't know anything about this company still. So what's your average share price on this thing? It looks like the high was right around $1.54. Could have been a little bit higher in any particular day. So let's go into the daily chart. 113, okay. So you're down a little bit right now. Here's our daily chart. So we peaked at $1.95 back on the 11th of February. Okay. So this was a kind of a steep run up. This went up from 19 cents all the way to $1.95. That's a big rise. That's 1,000%. That's a 10x. And it's currently on its way down. And what we don't want to see is we don't want to see it coming down with lower volume. That's the problem. When it goes up on heavier volume. So, something to be aware of. Unless there's some reason that you might expect that volume's going to pick up, that volume is fading. 72 million, 90 million, 100 million. Now, the whole market for the last 2 weeks has been bad. This could be getting caught up in that. People aren't going to be dumping a bunch of money in penny stocks when the whole market is turning red. So this might not be just a CTRM problem. This could be getting caught up in the whole market downturn. Everything's been red for the last couple of weeks. Only a couple of green candles on all of those days. Obviously, that's a bit concerning. It's underneath the 9 EMA. It's underneath the 21 EMA at this point. Let's zoom in a little bit. And it's in the lower end of the Bollinger Band, which it just came into that. You know, it took a little while to catch up. So it didn't bounce there. A little bit concerning. But again, the whole market's down. So might not be CTRM specific as to why it's still coming down. Okay? You're going to have to make that decision on your own. I'm just going through the technical analysis. MACD is turned over, so it's still in the red. RSI is above 50. Anytime it's above 50, that usually indicates it could be an uptrend. But you can see here, it just still hasn't come down. So, I mean, this has been a slow fade. This has been a slow fade on its way down. Stochastic is down in the overbought territory, or the oversold. Doesn't mean it's hit the bottom yet, though. Does not mean it's hit the bottom. I don't see any divergence. So there's not much else we can tell from the chart here. Let's go to the 1 hour. I mean, 1 hour chart is probably not going to tell us much, just because the whole market's been down. There's been some red days. This looks like kind of a level of support right around the 92-cent area. You got a few candles there. I guess the next few days is going to tell you. So right now, you're right at that support level in the aftermarket. It was in that support level in the pre-market, went up, came back down to that support level, and it was at that support level near the end of the day the other day. So this is the third time it's testing it. A couple of times after hours, though. It's hard to use after hours to judge true levels of support. If it breaks down below this, I'd be concerned. If it breaks down below this 92, probably a reason for concern. But again, the whole market's down, so it's really hard to say. Deep in the money, how you doing? You actually remembered, all right. So, Krish, would getting a compliance announcement help it? Compliance announcement for not being delisted could help, yes. Compliance announcements always help. Ken, new subscriber, appreciate the content. All right, thoughts on Mara, performance movement by weekend. We'll take a look at Mara next. So it needed to be above $1 for 10 days straight to be in compliance. I don't think this met that, did it? Let's see. Where's their close? Close, nope, under, dollar, above, under. Oh wait, those aren't closes. Let's go back to the daily chart. Yeah, I don't think this hit 10 days. You got to get 10 days above $1 to be in compliance. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It did get it. So it should be in compliance. It should be in compliance. That could help. That could definitely help. So that at least gives them some breathing room. 11, 12. Yeah, you did make it. So they should be at least not at risk of being delisted currently. That can help. A lot of people will not invest in these if they're on the verge of being delisted. It's really hard to make money and not just watch it go away, and then the opportunity to trade it goes away because they get delisted. So that can definitely help. Does not mean it's going to stay up there for very long, though. Could just be a temporary reprieve. So good luck. Deep in the money. Sad to admit, but this week you're sports betting instead of options. The options market has been tough, my friend. It's been tough. So that might be an okay play. Stock Journey, how you doing? C, yeah, Tesla's having a rough go. Tesla's having a rough go. The whole market is. The whole market is. Not just Tesla. Hopefully we'll see a turnaround tomorrow. All right, let's check out Mara real quick. Krish, a lot of selling at 1 and 102 and around there. I don't know why. Do I think someone's shorting it? Probably not. I mean, this is you're not really going to get short sellers on these cheap stocks like that. It's just not worth it. It's probably just day traders. Day traders have a blast with these penny stocks if there's anything predictable. They just get in and get out, get in and get out. So if there's a lot of buying and selling around 1 and 102, that could be that, because you can buy a whole lot of shares and a tiny movement goes up a lot. At the same time, small movement the wrong direction, you lose a lot. So they're very risky. But that's usually when you see high volume, when the day traders get in and they figure out that there's some money to be made. All right, let's look at Mara. I haven't looked at Mara lately. Mara basically, it's a crypto. It's a crypto play. They do mining, if I'm not mistaken. And so they're going to go up and they're going to go down along with Bitcoin and the rest of the crypto market. And that's what we see here. Crypto took off, hit that all-time high. So did Mara. And I think Mara, if I recall, Mara is in the middle of expanding their mining capabilities, which is why they didn't go up as much as, say, Riot did, although they're back down to a fairly close to the same price. Or no, that's not true. Riot's back down to where Mara topped out at. So Mara's at 36. Basically, the fortunes of Mara are tied to Bitcoin. When we see Bitcoin go up, this is going to go up. When we see Bitcoin come down, this is going to come down. So you're going to have to just watch out there. That would be my approach to it. If you start to see Bitcoin drop, expect to see these drop. So by week's end, Bitcoin's on the way back up right now. So Mara could end the week strong in comparison to where it started the week, which was down here. I can't really go by traditional technical analysis where we're just looking at support levels, because it's going to be more dictated by Bitcoin than any of the support levels in the crypto space, than any of these support levels. Maybe these will indicate something, but like, I don't know if your regular traders are going to be using normal indicators on getting in and out of this, when you're basically going to look at Bitcoin and go along with whatever Bitcoin's doing. If Bitcoin tanks, expect a sell-off. Doesn't matter where this is at. If Bitcoin's tanking, nobody's going to look at this and see a resistance line or see a support level and think that it's going to stop there. I just don't think that'll happen. So, something to watch out for and be careful with when you're dealing with the cryptocurrency plays. That's why there's a lot of volatility there. Stock Journey, did I see the news on HCMC? You believe they closed their Series C shares into regular stock shares. HCMC was up 30% today. All right, nice play. Nice play. I haven't been paying attention to them since I can't get HCMC on Robinhood. So, Ken, you're welcome. Thank you. Much appreciated. Much appreciated. Tony, how's it going? Oh, is it morning where you're at? What are we doing? You've lost the plot. This is our Wealthcare Wednesday live stream where we just answer financial questions. So if you guys have questions, I'm going to do my best to answer, provide you with some value, and care for our wealth. Right? We got to take some time out of our week. Spend some time caring for our wealth. Speaking of which, I do have some voicemail questions that came in this week. I love voicemail questions, so I'm going to play one of those. So I'm going to switch back over to our questions and comments, and let's play our first voicemail.
Hi, James. This is Debbie Mitchell. I just had a question on a Guardian. I guess this is a 20 year illustration. Would it be to my advantage at age 69 to actually have a dividend option of paid up additions and a paid up addition rider, or is that not the blend? Should I have the paid up addition rider and the 1 year term dividend option on the Guardian policy. I'm not too sure which one would work better for me. Um, because of my age too, I'm kind of limited to what I can do. I don't have that much time to make it work like for IBC, because that's what I'm trying to do, the infinite banking. And I just wanted to get me a policy together that would actually give me the most cash value that I can get out of it between now and 15 years. That's about what I'm working, I feel that I should be working with. And I'd appreciate your answer. Thank you.
All right, great question, Debbie. So, yes, I think you're on the right track when you're looking at Guardian with the paid up additions and the term blend. A couple of reasons. One, you're not working with as much time as a lot of other people work with. So if you just get a regular whole life policy, those don't have a break even period until 15 or 20 years down the road. So if you're wanting to use this for infinite banking, you're going to need to get some cash value in the policy right away. That doesn't happen with regular whole life design. If you just use a paid up dividend option and that's it, you're only going to get a very little bit of cash value in that policy. Break even period is going to be quite a ways out. So it's not going to work very well for an infinite banking type of policy. Now, when we blend in the annual renewable term insurance, we're able to reduce the whole life insurance costs and still meet the guidelines for the death benefit so that we can get a high MEC, and we can meet that with that term insurance at a much lower cost and still put in all the money that the government will let us up to the MEC limit. So that is the best design in my opinion. And if you're looking at a 15-year period where you're going to be funding that, you're going to need access to that cash value as soon as you can get it. Now, the thing with Guardian is the optimal design with Guardian with that blend, it's about a 7-year pay. Okay? Now, there's a few reasons why that might actually work really good for you. We can stretch it out longer than 7 years, but we're blending this with annual renewable term. And so every year, that term insurance gets a little bit more expensive. So in your situation, you're not going to want that term insurance to stick around for a long time because it's going to continue to get more expensive. We're going to want to have that in there, dump in the money you're looking to dump in, and then get rid of that term insurance so that we can keep the costs in the policy as low as possible so that you can get that cash growth. So hopefully that makes sense. There was another part in that question that I wanted to address. I think it was right at the end. Can't quite remember what it was. Give me just a second. It was the dividend options. The dividend options. You want your dividend options to turn into paid up additions. You want your dividends to turn into paid up additions. You do not want to use your dividends to buy term insurance. Okay, that's not going to help you grow your cash value. It'll just give you extra death benefit at the cost of annual renewable term. So that, yeah, I would not recommend using that type of dividend option unless there was some other reason that you needed it to meet whatever death benefit you're trying to get. But you've already indicated to me that you would like to use the infinite banking, or you would like to use your policy for the infinite banking concept. To me, that means we're going to need access to that cash value, and we're going to want to see that cash value grow. So best way to do that is going to be to blend that annual renewable term, shorten up that period that we have that annual renewable term on it. And because you're getting into older age where that cost goes up, you may or may not want to continue making those payments on into retirement either, on the base premium part, the whole life part of that. So there's always a reduced paid up option as well after those 7 years. Or you can keep making the minimum payments at the base premium level, for as long as you live. Which one of those you decide to go with is going to depend on where you want that death benefit to be, and if you have the income to continue paying those premiums. So a lot of different things we can look at. These are the questions that we answer when we do our one-on-one session. So feel free to sign up at my Calendly link. There should be a link in the chat, and there is a link in the description, and there's a link on my website where you can sign up for a meeting with me on my Calendly. My schedule is on there. You just pick a time that works good for you, and I'll be there to help. So thanks for your question. Benny Butler, your test worked. I see your comment. How are you doing this evening? Krish, if I was in your position, what would you do? I would do more research on why CTRM may or may not go up or down. So I would need to know more about the company itself. That way I can decide, is the movement that's happening right now, is it because the overall market is down and it's worth waiting it out? Or are there other better opportunities out there that I should be looking at? You got to decide. Every day that you're in that stock, you're missing out on the opportunity to be in a different stock. Now, that doesn't mean that I'm advising you to FOMO and to any other stock that you see that might be hot, but only you know what your play was when you got into that. Was that a long-term play or was it a short-term play? Did you get into it hoping to see it keep riding up? If it didn't do it, if you're just trying to be a trader, the best thing for a trader to learn how to do is cut your losses early. Okay? If you get into a position and it goes negative 5%, for you to get back to positive, it needs to go back up like 5.2%, something like that. If it goes negative 50%, you need 100% return to make up those losses. That's a big difference. So if you learn to cut those losses early at 5%, you only need to make a little bit more to recover that. So something to think about. If you're not a trader, if you're an investor, and you're buying into a company because you did your research on it, you think it's a long-term play, that there's a lot of potential, look at the dips as an opportunity to add more shares. You just dollar cost average in over time, and if your thesis plays out and it's a good company to own, it'll pay off in the long run when it comes back up. So those are the things that I would recommend using when you're trying to decide, what do I do with this thing? Do I get in? Do I get out, or do I stick it out? Hope that helps. Stock Journey says CTRM is definitely a long-term play. It's a maritime company, so it does not move much on news. What would make it pop would be a partnership towards expanding its fleet. Stock Journey would hold what you have at this point with the market falling. Yeah, it's always hard to make decisions when the market's falling, when the overall market is falling, because it's not like there's a whole lot of other options that are better at this point. So when the market's down, either you cut your losses early or you got to wait it out. Hope it comes back up. Jones, any update on my options course? No, there's no update on it yet. I've just been so busy. I haven't had a chance to dig into it and start filming anything. For the most part, I have to be at this computer. And I'm at this computer for like 60 or 70 hours a week already. And so the last couple of weekends, when it got to the weekend, I got to get out of this seat. And I haven't been wanting to come in and turn it on over the weekend. So one of these days soon, I will get back here. I will get my videos up and we'll get the options course going. With the whole market down as it is, it's tough to recommend any plays out there right now anyways. Although it could be a good time to get into some. Could be a good time to get into some of these plays that are gonna be coming back. And in the meantime, sell some covered calls, make some income. The downside is with all this dropping, premiums kind of stink. So if you've owned the stock for a while and the current price is down below where you've averaged in, it's really hard to sell covered calls because you always want to try and make your income up at a level that's going to profit you, whether it goes up or not, whether it goes up through that strike price. A lot of risks involved there. There's other plays too, selling puts is a good way to earn some income. Those are kind of the two backbones. But right now everything's down and the option prices kind of stink. So haven't been in a rush to get that finished. I've been more trying to catch up on my rest, so I can get the energy to finish it. I am trying to get it out though. I know there's a demand out there for it, and I want to get that out to help you guys. Jones, is there an optimum chunking amount for dynamic banking, or is it the bigger the better? It is not the bigger the better. So it really depends on what your goal is with what you're chunking towards. If you watch, I go over this on one of my dynamic banking videos. It's one of the specific examples, and I talk about the size of the chunk. But basically what we look at is, what is the interest rate that you're paying on your line of credit? What is the interest rate on the debt that you're tackling? If the debt that you're tackling is higher than your line of credit, a big chunk that would pay it off or take out large chunks of it will make a whole lot of sense. One of the nice things about utilizing this dynamic banking method with a line of credit, though, is that we're leaving ourselves room in that line of credit in case there's an emergency that comes up. That way we can put all of our money to work paying down the debt and still have access to money if we need it. So we don't ever want to take out and spend all of our line of credit. We always want to have that cushion in there in case an emergency expense pops up. We're not going to get in trouble. So if the interest rate is higher on the debt that you're paying off, or if you're chunking it towards an investment and you have the opportunity to earn a lot more on the investment than what you're paying in interest, larger chunks can make sense. If it's a lower debt, if it's a lower interest debt that's lower interest than your line of credit, it still makes sense to do dynamic banking, only you most likely want to do a smaller chunk, something that you're going to offset most of that interest cost each month. That way, your overall interest cost is less than the interest that you're going to pay on the debt that you're paying off. Case in point, let's say you have a 7% interest on your line of credit and you have a 10% car loan. Okay? Makes a whole heck of a lot of sense. Use larger chunks in that line of credit, knock out that 10%, and then when your income brings down that line of credit a little bit, not only are you paying 7% on that debt, but you're also offsetting it a bit each month. So your average might be 6%, right? Because you're not offsetting a lot of it. You're just offsetting a little bit because you took a huge chunk. If you're offsetting, let's say your car loan is a 4% car loan. Now you've got a 7% line of credit. You want to do a smaller chunk that almost matches your monthly income. If you do that, you take that smaller chunk, now you're knocking out 4% on the car, and your income comes in and it brings it down close to zero. So instead of 7%, you're going to end up paying approximately 1%, right? Or 2%, something that's lower than that 4%. Like that's going to be your average cost of borrowing throughout the month. It'll be the equivalent of 1 or 2%. It'll still be 7%, but it's going to be on a balance that's so low that it's only going to be like you're paying 1 or 2%. So hopefully that makes sense. That is how dynamic banking, even with a higher interest line of credit, can work to pay off a lower interest debt. It's amazing. The numbers just work. Check out my dynamic banking videos and you can see I put a lot of detail into those on how exactly it works. You can get a good idea of what's going to help you out. So that is one way, like if you want to use that time that we meet together to identify those things, if you can't quite figure out what the best way to do it is, certainly sign up for a meeting. We can go over that. All right, let's see. Tony says, February announced 2 deals, adding tanker capacity to its mix and doubling its fleet size. That's good. What happened? Shares of Castor Maritime gained 61% in February, according to data provided by S&P Global Market Intelligence. So that pop was due to those deals. And the hype is kind of fading. So people are going to be left bag holding. If it ends up closing and leading to good earnings, you could see it go up. Might be a little bit though. Stock journey. Well, there it is. If you knew a lot more about that sector, you would probably get more share with the discount going on. Stock says CTRM jumped because it was targeted by the Wall Street Bets Reddit. Costs went up as well. So, Krish, I think you're screwed because of the Wall Street Bets. Here's something to think about. Every stock that's jumping right now, Wall Street Bets gets the blame. It doesn't matter if it's Wall Street Bets or not. I mean, if anybody on Wall Street's Bets is talking about that, the media is going to blame it on Wall Street Bets. That they're talking about it. It's some event where a bunch of people, ne'er-do-wells are going to get together and pump up a stock that they shouldn't be pumping up. That's just kind of the narrative out these days. And it allows hedge funds to get in and throw their money around and get out, doing pump and dumps without getting any of the blame. So it may or may not have been a Wall Street Bets play. Might have just been people doing their due diligence and finding out that happened. A lot of Wall Street Bets people do that. They do really good due diligence. So just hearing something as a Wall Street Bets play, that doesn't mean anything to me. Like that's not a negative connotation in my mind. There's some smart people on there. And, they'll put that information out there for people to do with it what they will. Tony, this is an interesting company in an attractive niche, but the market appears to have priced in the opportunity. In the last 90 days, Castor went from less than 2 times sales to 4.5 times sales. All right, it'd be interesting to see what is the typical price to earnings or sales to earnings or price to sales, price to sales in that sector. So is that normal? Is that high? That'd be good to know. You're welcome, Jones. Motley Fool has a piece on it. That probably is partly why it jumped up too. Motley Fool definitely pumps up stocks, just like Wall Street Bets does. Stock journey. Careful with the GME play. Even though it's getting FOMO, driving the company itself is not worth the valuation it's trading at right now. Just his opinion. Tony says he thinks the GME CEO knows what he is doing. Watch what happens if it hits 500, but there's a stock raise guaranteeing GME. Yeah, I'm sure. R. Ross, Tesla dropped today to 527.60 after hours around 6 o'clock. No, it didn't go that low. Maybe you mean 627. Tesla didn't go that low. The 1 hour chart has 649 as the low. 5-minute chart has 649 at the low. This is on Webull. So yeah, it didn't go to 527. You might have seen a candle go down. Sometimes that happens, but that's not accurate. Vasil, why did Tesla drop so much then rebound quick? Yeah, I don't know what happens when it does that. Sometimes there will be a long candle that goes down. That's not a sale. Like, it's not a sale in the sense that we see the tickers go in the bid and the ask. That's not what happened. It could be an option being exercised, showing it go down. There was another reason. What was the other reason that we saw that? I remember it was an issue a while back. Happened in a bunch of stocks. Can't remember why. I don't know when earnings is, Krish. When's earnings on CTRM? And if they just made that deal, it probably isn't going to affect earnings this time. So earnings may or may not bring what you're hoping it would bring. Sierra, there was a Starship test earlier. It landed successfully. And then just a little bit later, it blew up after that. Or it had a rapid unscheduled, what do they call it? It's a RUD, disassembly, rapid unscheduled disassembly. BDN, how you doing? Is it a good time? Yeah, I think it is. Anytime Tesla's down in this low range could be a good time for that, BDN. Stock Journey asks, is there a squeeze going on in Rocket? You just saw price fluctuation today. Today was rough in Rocket. There should be a squeeze going on in Rocket. It definitely happened yesterday. Yesterday, it shot way up because of it. It looks like the bears and the shorts took control today. We'll see what happens tomorrow. Prior to today, the highest strike price available, there's two squeezes going on. Short squeeze and a gamma squeeze. I should say there's two squeezes possible. There was significant short interest. Rocket announced a special dividend of $1.11, and that caused a lot of people to get into it, puts pressure on the shorts because they're going to have to provide that special dividend to whoever they're borrowing the shares from. So at $1.11 per share, that's a significant dividend with where the share price was at. So the share price went up, squeezed. It went above the highest option strike price ending this week, which was 36. That leads to a gamma squeeze. All of those options could end up in the money. Now, today kind of reversed that fortune. It came down below 36. It came back down to 27 and 28. So now, not all of those options are going to be in the money. It can come back up on Thursday, and we can see a gamma squeeze again. They did open up more strike prices all the way up to 64. It's possible if we get a lot of volume, we get a lot of people interested, people are buying options all the way up to 64. Big risk at this point, but it's happened before. We could see a gamma squeeze that pushes this all the way up. Now, Friday is a few different things. One, it's the opportunity for a gamma squeeze. Two, it's a quad witching day, so it's going to be kind of weird. There's a lot of things expiring that day, a lot of different options, futures options, and monthlies and weeklies, and something else. Commodities, I think. So, and then Friday is the last day to own the shares if you want to get that dividend. You need to be the owner of record by the close of market to get the dividend. So there could be a lot of people exercising those options on Friday. If the market makers have to provide those shares, they're going to have to buy them. That could help with the gamma squeeze. So I'm really hoping we see that. I'm sitting on 2,000 shares of Rocket currently and some options. So I didn't sell yesterday. Kicking myself for that. I have not learned to take my profits when I see something in the future. Like, I was looking at Friday as the goal. I should have looked at yesterday as the goal in and of itself. Taken my profits when we hit 70% gain yesterday. I was up so much. And then today, I rode it all the way down. And now I'm down. Now I'm down. So I gave up all the gains yesterday and then some. So I'm hoping it goes back up tomorrow. I mean, I want the dividend, so I'm going to hold it through Friday if I have to. But I've also got some options. So hopefully we come back up tomorrow. The overall market today was really not good, though. So if there's one thing that I would impart on you, that is, don't be afraid to take your profits. You'll definitely be happier for it than if you didn't and you're left holding the bag. Basile, yeah, I think I just answered your question. I'm still in my rocket position. Stock Journey, we'll see what rocket does tomorrow. Make your determination for Friday. Yep, that's what I'm doing too. Didn't learn my lesson when we did the Tesla inclusion? No, like my problem is I have a plan. I have a plan in my head. I see the end game. I see the finish line. The problem is people pump it up before the finish line, and then it comes down before the finish line. And so I'm not ready for it. I'm thinking the pump up is still going to keep going up all the way to the finish line. And I keep being wrong on that. If I wasn't, my account would be very healthy right now. I just got to get better at it. That just comes with practice, I think. Yep, got to sell when you make the gains. Got to do it. Tony, a lot of settlement happens on close exactly. Buy, sell at market close. Oh, that might be a good way to do it. I wonder if you sell at the market crossing. I wonder if you sell at the cross, if you still get the shares in your name to get the dividend. Or is it too late for the people, whoever buys it? That's interesting. I wonder what the answer to that is. Okay, stock. Yeah, give me the signal. Nick, you're just researching your stocks, making sure you're not crazy. I believe my stock's 100. Just hoping this is only a cycle, and a month or two from now, we are laughing. I hope so, too. I hope so, too. No, it's not called sell at market. I mean, just a market sell. That's just a market order. But it's a closing cross. You can sell. It's called market on cross, I think. Something like that. Something like that. All right, so we have another question in here. I'm going to play our second question. Here it comes.
Morning, James. This is Ahmed. I had a quick question for you regarding the whole life policies. I understand that IULs, most of the returns come from interest that imitates the performance of an index or a fixed rate. But in whole life, I understand that it's mostly dividends. Those dividends are actual dividends, right? Not the same scenario where interest is mimicking a dividend. I'm asking because I'm trying to avoid interest to the extent possible, and someone told me it's all the same, but I just wanted to verify. Appreciate the answer. Thank you.
All right, Ahmed, thanks for the question. So the question is, the interest that you earn from the IUL is based on an index and the growth, right? And so you're going to earn the interest rate based on that growth. Is the whole life dividend, is it similar? Is it the same thing? It sounds like somebody was telling him that it was. It is not the same thing. The IUL growth is based on the growth in the index. So if the index gains 10%, you get a 10% growth, unless you get a different participation rate than 100%. But essentially, that's how that works. There's also universal life. That universal life, you just get whatever the declared interest rate is from the company, and that can vary year to year. That one's just something they pull out of the hat. It's not based on their actual profits that they're making that year. That does factor into it, though. I mean, the more profitable the company is, the higher interest they can offer. Okay? Whole life, on the other hand, You become a part owner of the company. That is a different situation. Now the company, it makes money on universal life products. It makes money on index universal life products. It makes money on term insurance. It makes money in investments around the world, either buying bonds or treasuries or businesses, right? There's all kinds of ways that they can make money. Some of them are making money buying crypto now. So there's all kinds of ways that insurance companies can make money. And whatever they make for a profit gets paid out. Some of that gets paid out as a dividend to policy owners. So whole life policy owners become part owner of the companies. And that's what's going to get paid out. So that's what the dividend does. It is not a declared interest rate, and it is not based on the growth in an index. So hopefully that answers your question. They're definitely two different things. Any follow-up, feel free to reach out. My voice is starting to go away. Stock asks Tony and Nick, you guys holding any penny stocks through this downturn? Tony, his due diligence is asking the cat. She has a better average than Gordon, the dimwit Johnson. And he is not holding any penny stocks. Nick, depends on what you consider that, but probably. His whole big portfolio is 3 stocks: AQMS, SENS, and NNDM. That's it for the portfolio he watches and manages. So a penny stock is anything under $5, technically. Anything under $5, not just under $1. Yeah, it's judged by the share price, Tony. Some people think anything under $1 is a penny stock, but it's actually anything under $5. And I don't know when that changed. I think it used to be anything under $1. But I think that changed. And I think his AQMS, I think that one qualifies as a penny stock. SENS, I think SENS does as well. I think they're both under $5. Yeah. Yep. Why do you ask? Stock? Are you holding penny stocks? You wondering how they're performing? If maybe they're a safe haven from what we have going on in the tech, NASDAQ. So much red. So much red. Any other questions for me, guys? We're going right at an hour, and my voice is fading. Oh, you got 5 different pennies? Hey, it's not crazy if it works. It's not crazy if it works. Whatever floats your boat. All right, my voice is shot for the night. I'm gonna bid you guys adieu. We'll be back in the morning for the market open, and we'll be back next Wednesday for our next Wealth Care Wednesday. So I appreciate you guys. Appreciate you guys showing up, asking some questions. Hopefully, not only did I give you guys some value, but people will be able to watch this and get some value from it when they find themselves in a similar situation. So I'm going to play you guys out with some music, and we will see you next time. Oh, what's up, Vasil? You got a question before I go? Stock, you're addicted to the price volatility. All right, one more. Make it quick. As long as my voice holds up. See you tomorrow, Tony. Appreciate the thumbs up. I'm sure I'll see you in the Discord, too. Good night, Nick. Waiting on Vasil's question. Vasile. Your option calls expire March 19th, and they're down. Should I just let it ride? What's your loss right now? Is it a big loss or a small loss? Oftentimes, when you're trying to decide, when I'm trying to decide if I'm going to keep a position or not, you need to reset. Don't think about what you're in for. Big loss, that makes it harder. Don't think about what you're in for, how much you've lost. One way that I like to do it is think about, would you buy that option right now for that price? If you would buy that option right now for that price, then that tells you to hold because you think it's going to be coming back up. If you wouldn't, that kind of answers your question. Maybe you should get out of it and go find a better opportunity for your money. Because the closer we get to the 19th, the faster that's going to lose value. You already got a big loss on it, but it's going to accelerate. So I don't know how much value you have left in it. If it's significant, it might be worth it to get out if it's not a position you would buy yourself into right now. That's how I make that determination. So good question. Hopefully that helps. Yeah, stop losses are tough. I don't use stop losses. Stuff moves so fast, and they're always doing stuff to kind of shake the tree and get you to get out for a loss, trigger those stop losses. But at the same time, maybe you should be doing the stop losses. Might end up making more money. Quadruple witching day. No, it's March 19th. March 19th would be quad witching day. March 19th. All right, I'm out of here playing you guys out with some music. Take care. You're right. Stop loss would have saved me today. Yep, but I would have felt horrible if it triggered my stop loss and then shot up, which is what I thought I was going to do. I should have just got out of it yesterday. I should have got out half of it yesterday. If I'd have taken half of it yesterday, I'd have been really good. Oh well, live and learn. See you guys later.